Hey everyone, welcome back to Build Shefa, the podcast where we uncover how investors, developers, and entrepreneurs drive ROI and build meaningful, profitable businesses. I'm your host, Liat Siegel, and today's guest, Matt, is a powerhouse in Florida's luxury home building scene. Matt is building a two-pronged business, raising equity to develop higher-end 4 to 5 million spec homes and construction adjacent ventures. He's laser focused on efficient operations, strong trade relationships, and delivering fast, resilient projects, even in a shifting market. But what really sets Matt apart is his approach to value-based networking. He's someone who builds authentic relationships, shares knowledge generously, and still protects the key strategies that make his business thrive. Today, we're going to dive in to how Matt navigates Florida's post-pandemic real estate dynamics, why he believes luxury home building beats other asset classes, and how you can apply value-driven thinking to scale your own ventures. Let's jump in. Matt, it's so great to have you here. We've been in talks for quite a while to get you on the podcast, so it's fantastic having you here.
Yeah, thank you for having me on. How did we get connected again? I think it was just through, again, the organic marketing. I think you commented on a LinkedIn post of mine, or I'd comment on one of yours, and it just happened.
Yeah. Amazing. It's so good to have you here. And we talked a little bit about gators before the show, and I love the backdrop and the beautiful sounds of nature. It's fantastic.
Yeah. No, I chose to take this call on my lanai here, as you can see behind. So I'm down in Sarasota, Florida. Very tropical right now as we get into end of the dry into the wet season, and I'm in this little bit of like an oasis, if you will, where there's a ton of birds always in the backyard. There's a little bit of this lake. You get the turtles and get everything. Well, we were talking about the gators, and you're asking, do you actually see gators here? I was saying what usually happens is the gators love to navigate your stormwater infrastructure in order to jump from pond to pond. They're always looking for some food and ways to grow. So it's not necessarily they're crossing the street in order to get from pond to pond. They have their own little highway.
It's crazy. I mean, like, I'm from New York, so I don't even think about any of that. But it's
all right.
Cool.
You got. I'll let you have the rats, and I'll stay with the gators.
I hear that, but I'm out of the city now, so the rats are gone.
What do you have? The pigeons? What do you have up there?
No, we have eagles now. We have vultures, bears. There are bears.
Oh, I love a bear. I love to see a good bear.
My son thinks he can wrestle with one, and I'm like, please don't try.
You pray. Let's keep that in theory and not in practice.
Yeah. He's one of those like boys where he's just like, I'm gonna wrestle anything, and so.
There's the big thing going on right now is there's this debate on if 100 humans can defeat like one gorilla.
Mm-hmm.
And I think the consensus here is no. I think the consensus is no, but it's creating a lot of, just like hype online. They're like, well, what if it was like 100 John Joneses? John Jones being a big UFC fighter. And the answer is probably still no.
That's crazy. Don't try it. Don't try this at home, folks. Yeah. So let's dive in. I'm curious. I have a interesting question for you. What is one insult that you received that you're actually proud of?
An insult that I've received that people say I'm too much of like a dreamer and free thinker. So when I was at my past employer, these big theories, I'm going to create Strauss development. I'm going to jump away and I'm going to make it happen. And they're like, that in the W-2 world, they almost expect you to, you're just going to be right back here. And be right back here. And I'm okay getting called a little crazy. I'm okay. I'm.
You wear that
fine.
As a badge.
I'm fine and dandy being, a little bit of a hippie, and a trusting in myself. I'll figure it out one way or the other, even if it takes me doing some Uber or serving some coffee. There's a lot of avenues I would go down before going back to an in-person 9 to 5. I think.
Yeah. They call people like us unemployable. Because it's just we just dance to our own beat and just can't be tied down to any one thing. There needs to be that freedom and the ability to grow.
Yeah, it's like they ask you like, what do you like to do for fun, and
I like to work.
yeah, I like to build businesses, on the weekends I like to talk real estate. I was just at the beach last weekend, and I was talking to this guy who was a GC up in North Carolina and down in Punta Gorda, and he was just an older guy but successful. And I should be at the beach just like drinking. I was drinking, but we were talking real estate for a couple hours. I never had met the guy before. He just sat behind us. I helped him use my car keys to like pop a wine bottle he had on the beach, and I just started a conversation.
Wow, amazing. And what about if you could be remembered for one thing in your career? What would that be?
I have this saying called "share laugh, spread smiles." So if all I can do is you never know what the power of a laugh and what the power of a smile can do. It's the auxiliary effects of it. And if I can be a dreamer, have a few cool projects, share some laughs, spread some smiles, leave some sort of an impact and a legacy, other than growing somebody else's bank account, I think that would be pretty cool.
Amazing. I love that. We have so many down to earth, such authentic people on the show. And I love every time I speak to somebody like yourself, I feel so aligned and so grateful that we have this, the ability to connect like this and get to hear from more people like you. So let's dive into the questions. Looking back, is there a turning point or a key decision that shaped your approach to building to building companies in construction and real estate?
We were just talking about it. I've always been a little bit of a free thinker and an entrepreneur. So just a little bit of a background about myself, your viewers. I grew up here in Sarasota, and my parents had bought out in Lakewood Ranch back in 2003 when it sticks. Lakewood Ranch is a large #1 multi-generational master plan community in the country. So what it was in 2003 is not what it is today. It keeps on growing. It was an epicenter of development. So I grew up, I tell stories of when this super target was built right next to UTC being this huge, just mall, little live, work, play, but it's significant project where it went from field, supposed to be a pre-crash mall project, where now, because of the crash, it was built after, thank God. And now they're wrapping up a $300 million aquarium there. There's places right by there that, used to be a Circuit City. I point to it. They had the big sign in Circuit City, but now they built a Nordstrom Rack extension to it, So I just saw so much change, and it was invigorating growing up here. And I'd gone to school. I went to Indiana University. Thought I wanted to go down more of an investment banking type route. I realized I didn't really care too much about a couple of dollars in the share value. And I'm not a city guy. I didn't like the winter. So I came back down to here. I got a jump in real estate development at a large public developer. I was doing land acquisition and supported a project entitlement, and I was used as a financial asset across the entire state. We had put through 5,500 lots underneath contract through investment committee approval over a 22-month period. It was great, but I was always doing something else. There was always something else going. But when I was wrapping up college before coming back down here, I'd originally signed on with a green energy developer in Raleigh, North Carolina. There's always something like startup-y about me. We had jumped into this company where it had just a ton of good energy, young, bright individuals. I was immediately thrust into a position where I was leading a team of 47. It's hard to believe, but from a lead financial analyst perspective, where we put together investment thesis deck. And then it turned out CEO was, defrauding investors of millions of dollars. The FBI got involved, and the whole thing crumbled. But I was able to create some good relationships there. So when I was at the public developer, still working, the 9 to 5, I spent all of 22 working on just another startup, with a couple people from that company where we tried digitizing the credit marketplace for carbon credits in green energy. And I can go down a whole rabbit hole about that, but it's just a market that is broker focused, and we tried digitizing it. We had this huge idea of essentially turning into an ESG marketplace. So I was at the 9 to 5, I was comfortable, but I was still working 5 to 9 after it. I was still working on the weekends for this crazy concept that we realized the market just wasn't ready for it. But we'd spent a year working on it, which is fine. It all culminated. There was a renewable energy conference in Dana Point, California. It's a great story. We had we got out to California, and they're asking $5,000 per person to get into this conference, and we're just trying to network. It's a 23, a 22-year-old, and like a 27, 28-year-old. We're not here to drop 15 racks. We're just trying to get our face out there. So we ended up kind of Ocean's 11ing our way into the conference. I drove all the way up to Santa Monica to get from the Carlsbad area to get fake IDs printed at 10 o'clock at night, just to figure it out. It worked for the first day. Eventually, they caught on that we weren't 15K individuals, when we showed the way. But it just showed the grit that you got to figure it out. You got to figure it out. So going back to what shaped my approach is it's trial and error. Trial and error, and letting the free mind think. So when I had broken off from the developer in January 24, I didn't really have that much of a clear vision. I knew I wanted to raise capital. I knew I wanted to chase on my own ventures. I had joined a multifamily syndication group, if you will, where it was one of those sign up for the classes. So I signed up for the class, and they got my $3,000. It's all right. I got a couple good connections from it, but I definitely overpaid a little bit. But I saw this individual, and it just gave me the confidence of he only had done a couple deals, but it seemed like, this is something I can raise capital also, and you realize it's such a long-term game. But I can tell you, in January 24th, I didn't really know what direction I was going in. It's all kind of evolving. So I think the summed up is it's trial and error, and it's figuring it out. So that's how it weaseled and shaped my way. Where today, beyond consulting for home builders, where I help a home builder out in Punta Gorda, I manage some entitlement for a group on a couple projects. We've just adapted, especially with the partnerships that I've been able to create, the great mentors I've been able to bring on into this realm of luxury development thesis and vertically integrated construction and just construction related endeavors. It's all just shapes it day by day. And I'm sure on your side, Liat, as well, I'm sure every day brings a new, I should shift it this way or I should shift it that way. It's always a free flowed motion. So it's always hard to summarize what your business is in a couple of words, because you can keep your business what it is for a couple of words, but it's probably going to limit or shift you where you gotta be. I
mean, it took me a long time. It took me a long time to get to the point where I can just say ROI driven interior design. It took so many iterations and so many. We were talking before the show about the obsession, right? The just constantly just getting just going for it and continuous. That's just part of the grit and entrepreneurship. And somebody said to me recently that, rockets, when they're hitting a target, even like a ballistic missile, it's constantly course correcting. It's never just going straight for the target. And like the alligators, you're saying they're challenged, and they're just, the way that they move. That's life, right? That's we're constantly course correcting and iterating in order to get to that, hit our target and get to our goal.
Exactly. It's the rocket is a fantastic analogy. It's not just straight. It's never just straight. So
Yeah.
If anybody says it's straight,
they have no idea what they're talking about.
They have no idea what they're talking about.
No idea. It's a bunch of nonsense. Yeah. You're building a company that keeps much of the process in-house. What inspired that model? How has it impacted margins or investor confidence?
Taking the step back, I think as a business and as an entrepreneur, you should always be chasing, hey, how can we capture margin, if you will. Capturing margin through efficient operations and, segment-based growth, viewing it as segments of an entity, I think has tremendous value upside. Where a lot of our business and a lot of our theory is centered right now around small business acquisition or small business optimization, where you may not know this, Liat, but 9 out of 10 small businesses, they close their doors before selling. You have a lot of an older generation aging out and not being able to sell their assets, and they're a lot behind from a digital perspective, from a marketing and optimism. They're just behind the times. However, these small businesses, once they're optimized, once they hit a certain NOI targets, private equity starts getting very interested. Already in my market, you have a lot of these trades. They don't know it, but they're actually owned by a BlackRock or a Blackstone entity. It's already happens on a significant basis. I have a business partner where he was able to acquire a brick and mortar coffee brand with a longtime owner's name. He opened up a Shopify store for it, him and his team. And within 24 months, they've been able to 20 times valuation, the entity, 20 times return. So tailoring that from a construction perspective, we're always looking at, hey, how can we optimize from a trade or commodity-based perspective to keep that margin in-house? And maybe it comes to a point where we're able to spur it off and gain those exit yields from an entity. It's a venue of capturing margin in projects, especially in real estate. I think there's tremendous opportunity, and that's what we've been showing our investors, that hey, there's opportunities not only to bolt-on acquire through entities that are out there and could be listed or are getting listed, or there's opportunities to grow via grit. And that might involve a little bit of investor capital in the intermediate term from a cash flow optimization perspective. But it yields a lot more tremendous growth than just buying into a multifamily syndication, in my opinion.
Interesting. That's fascinating. It's another avenue for investment and growth. So when working with investors, is this the kind of guidance that you find that they need the most? Like, how do you help them align for long-term success?
Increasingly difficult, obviously, today in the age of TikTok, where you get 6-second time spans. And everyone is short-term in nature, where from a investor perspective, these are long-term outlooks. It has to be long-term outlooks, and it has to be long-term relationship building in order to grow together within the entity, especially for someone that's young like me. All it takes is one bad deal to ruin your name. That's all it does. That's all it does. You've seen this in the multifamily space. So give some background. And when the boom was happening in post-COVID, 2020, 2021, 2022, 2023, groups that were of inexperienced nature from an operator perspective, purchasing these deals at tremendously high valuations. They were buying 2 caps and 3 caps and 4 caps in real estate, saying that, hey, we're going to do a value add game plan on it, and we're going to be able to sell it again at a 4 cap, and we're going to give you a 30% IRR, whatever the hell they're saying. And a couple of years later, the asset's struggling, and they go back to their investors for a capital call. So they're asking more money from their investors just to, stay afloat, or the assets going to the bank. I can tell you those people are going to have a whole lot hard time trying to get their head out there again to raise some capital, private capital. Having a long-term mindset, just from a relationship building perspective, just from a always keeping your investors first perspective, even if you don't have the investors right now, but just always looking at a deal on how is this creating my investor first, even though if you don't know what it's going to be, Bob or Joanne or Steve you haven't even met yet. I think it's very important when you're building your entities and building your investment opportunities to think of your future investor in every conversation. Where I live and where my team lives is trying to be able to dodge and swindle when everyone is going that way. Everyone is going in a direction, especially just on either in multifamily or in single family investing, where all they're doing is, let's say, looking at on-market listings, and you gotta get creative or have some creative endeavors. Or us, where we look at some of these small business acquisitions where a lot of people aren't even looking in the space. We're looking in a space where, hey, there's opportunities to pick something up at a 2 or 3 times NOI. At this stage, they even categorize it as SDE, because most of these companies, the owners are writing off salaries and et cetera to drive it down. So they look at it from an SDE perspective and driving it to a range where private equity or that next buyer will end up paying, 8 to 10 times NOI. So it's just getting creative, staying creative, communicating that creativeness to your investors, and finding those long-term matches. I think you're going to be a whole lot better than, going on a status quo, trying to pitch the same idea, trying to chase that money bag, trying to say, hey, I'm probably overpaying for this deal, but I'm going to get fees, so I don't really care. I don't think that's the best way to build your business.
Right. With authenticity and honesty is the best way.
And I'm sure you see it on your end also, where there's maybe opportunities to charge some ridiculously high rate, or say like, hey, I can come in here and I'll boost your earnings 15 times. All you have to do is do some ROI based design. And I'm sure you've taken an approach, like, hey, I'm going to be honest. This is where you could go, and I'm going to be there to help you. But I'm
100%. There's never a guarantee.
I'm trying to be there for deal 2 and 3 and 4, and not just 1.
Exactly. There's never a guarantee, because every business and every project has its own challenges, right? And you have to do the comparables and see, does it make sense or does it not? That's what I'm here for. Like, if you have something, and if I say that it can have this amount of return and that doesn't happen, then who are they going to come back to? So it's really and I think, like you said before about the long-term relationships, right? That we're building relationships, not just businesses, and we're building value and an exchange of energy, if you will.
I think that also connects to what we said earlier about businesses and looking a whole lot at this, because it could be one relationship that gets you thinking or drives your business in a certain direction, Right. So it's just part of the humility. It's part of the long-term mindset, and you never really know. You're one connection away. You're one partnership away.
100%. Let everybody else go into the rat race. Go far, go fast, whatever. Take it slow and do it right. Do it the right way. Yeah. How do you feel like the market has shifted, at least in Florida? How do you feel like things have changed over the years?
We're always increasingly unique. unique times. So, and I was able to see this fall on. So what had happened in Florida, specifically in West Florida, Southwest Florida, and the market that I'm in, what had happened post-COVID, so we're in the COVID times, everywhere up north went straight lockdown, remote work became a thing, Florida was open for business, and there's a huge rush of everyone that was coming down here. Unbelievable rush. You were seeing year over year 50 to 100% increases in median prices and just neighborhood prices, just from a micro perspective. So what had happened is, and at the same time, there's these builders that had great land pieces, but the trades were in super high demand. Everyone was trying to build. So you had a resale market that went from, your average 45, 60 days on market being an average to 2 hours on market. It became just such a bidding war on the resale side because people, number one, they're moving down here and they needed somewhere to live. They would buy a home even as they're waiting for the home that they're trying to build. A lot of these builders ended up having backlogs of 18 to 24 months because they were taking on everybody. Like, hey, if we can sell a home, we can sell a home. There was a lack of true understanding of supply chain in the situation, where a lot of these builders didn't know how many plumbing roughs they could actually do on a daily basis, how many trusses they could bring in. Trusses were coming down from all parts of the country just to complete a backlog, but prices were going really high. What has happened increasingly is asset values peaked. There's this back return to work. Not everyone's being able to get rid of the remote work. The area doesn't really have quite the long-term sustainable jobs to support those. Interest rates went up. So just the affordability of life is crazy, where it's so difficult, especially for a family down here, a family of a couple kids at home, to be paying $4,000, $4,500 a month in a mortgage and still bring home food to the table and go on discretionary vacations, etc. I think the asset prices just got way out of whack for the cost of living. And what is the buyer chasing? So we're now at a point in time, not to go too crazy, where $30,000 of purchasing value in 1980 is equivalent to $162,000 of purchasing power today. How many families make $162,000? The median home price in this country, in order to qualify for the median home price in this country, households got to make $142,000. How many households make $142,000? That equates to about 27% households, of which 80% of that 27% already own a primary residence. So you have 50% of the market chasing 5.7% of households. So what has happened down here, and you're seeing shifts in other areas where New York is booming, Chicago's still booming, Boston's booming because those are great job centers. In a return to work climate, those are great high paying job centers. Down here, what's going is everything's out of whack, where the supply on market is really high. You have a lot of people trying to sell, at least people trying to list, thinking their home is worth 2022, 2023, 2021 valuations. They'll say, hey, I just bought this for $800,000. As a buyer, I don't care what you bought it for. I'm telling you where the buyers in the market is today. So there's a huge price disparity between where buyers are at, what buyers can actually afford, and where the listing market is. You have a lot of builders that have developers in nature, or, it's a business. So as long as the economics of the business work, that being land price, plus how much it costs to build, plus some sustainable margin, if you will, they'll sell in order to get sales in the book. They'll sell in order to keep the lights on. They'll move around their operation, and that valued price might be significantly lower than where these resell and where they are at. The builders have the tools with financing in order to drive down interest rates and throw money towards closing costs that sellers on the resale market frankly don't have. So in today's market, you have a lot of supply on market, a lot of people that are trying to get out of where they might be underwater on an asset. You have a lot of people that bought in from an investment perspective, but you're seeing rent deflation across the board. Again, it's the connection of how much can people actually afford. How much did people overpay for an asset? No, they're just trying to, net break even. How much concessions is having to get thrown out? You might go down the street and say, hey, they're advertising $2,200 a month for a one bed, and other people are underwriting to that $2,200 a month for the one bed, but they're not advertising that they're giving you 3 months free rent for that $2,200. So you're not actually paying $2,200 over 12 months. You're paying $1,800. So it's a really unique time, especially just in the economy side of the market, where how many buyers are actually there that can afford? How great of a purchase is it right now to, buy real estate as compared to, continuing the rent, where you have some desperate renter or desperate landlords trying to get their place rented, and put your money to work somewhere else. Was this huge buildup that had happened in 21, 2022 get assets to an unsustainable level where eventually the entire market's got to shift to where the buyers are? At the same time, there could be an interest rate cut, and maybe that makes it more affordable, and maybe people jump back into the market. I tend to be more of a, just a bear when it comes to the contrast of cost of living and affordability in reality versus, the traditional real estate market per se. But that's a long-winded way of saying, hey, we had this huge boom. Now we're actively seeing a correction where sellers can list their prices wherever they want to be, and they can throw their homes on market however they be. But are those sellers actually willing to sell? Are those sellers actually willing to take $200,000, $300,000, $400,000 equity hits just to get their place sold? Or are they going to hold on to it for a little bit and find some other avenue in order to not take the equity hit? What's going to really force people to sell? Is it be just the common changes in life where, hey, we need the extra bedroom because the family's growing. Hey, we need to move somewhere else because of the job market or because of family, etc. We need to move, and we can't carry two places, and I'll take the hit, whatever it may be. Those events will continue to happen, and that's really what's going to, force sellers to sell.
So we don't really know right now. We're kind of like in this in-between in Florida. Is that what it is?
It's just a increasingly recession-y, increasingly supply, but how many buyers? There's still a holdout for, adjustment period. Still a holdout with what Washington will do, with it be incentivized first-time home buyers, or Florida's talking about eliminating property taxes for homesteaded properties, or what is that creative but frankly unforeseen avenue that might, kick back the market for the economy? Or are the buyers just going to stay firm, and the sellers you're going to meet them, and the market's always going to adjust to itself.
Of course. So with all that said, how do you stay ahead of the curve with these uncertainties with regulations or supply chain? Now we have the tariffs, and just the overall changing economic realities.
As we talked about earlier, you have to stay agile in your business plan. You have to continue to network and continue to grow and be able to adjust. How I view in today's market is that you're either investing or building down here on the totem pole or up here on the totem pole. That being, you're either competing in the affordable space or the luxury space, because what is the question of where that middle class is? Where is that middle affordability? You continually press lower, and then you have to say, hey, how can I capture margins in a competitive squeeze margin environment? That be, hey, how can I keep some of these processes in-house? how can I capture margin where I can? How can I negotiate with land sellers in order to, get some conjunctive release? How can I get creative on how I sell in order to make my product more attractive and more affordable? Something that's more memorizing, or something that's a unique way to get into it? Or am I going to transition my way to a luxury market and sphere where there is still tremendous growth, where I'm in a market where we're 3 or 4 times value just compared to Naples and Miami, where people are still coming down. And ultimately, I think the big difference between a 2008 correction and today's correction is more than ever people that are in the luxury market with money know how to hold on to their money. They know how to optimize their money like ever before. People aren't just going to get their portfolios wiped out if they're smart enough. The luxury market is smarter than it's ever been. So you either align yourself with a market that's probably going to continue to have money, regardless of where the stock market goes, or where business goes, adventure goes. Or are you going to align yourself with, hey, how can I do something that is affordable to a mass in this new reality where, hey, wages probably aren't going to catch up and make up the 30 or 40% increase in cost of living from 2020. So it's just playing on. So in this new present reality, how can I compete to where everyone's at, or how can I shift my focus to where a luxury space we're able to grab some margin, just attract to a new clientele, if you will. So it's staying agile and staying focused.
It's that blue ocean and red ocean. Have you heard that analogy?
I'm not familiar with that one.
Where right, the red ocean is where all the sharks are feeding, and the blue ocean is where there's nobody, right? It's open and free, and you're able to provide a value in a way that nobody else is doing, and to see opportunities in a way that nobody else is doing.
So how have you seen it on your side? I was gonna get a little bit, walk my way towards it, but from a design perspective, at least I've seen it down here, and it really adds to your side as well. But in the market where supply and market's high, people aren't rushing to make a purchase. You have a lot more sellers than you have buyers. Builders and sellers just can't get away with throwing out the same, for lack of better words, white shit box, if you will. So like they can't just get away with putting together like the same white cabinets, clean, and the same thing that buyers walk through 15 or 16 or 17 different times. You've got to get creative. You've got to have something in your design that stands out. You can't get away with just, oh, I'm going to do this flip down the street. I'm going to throw in some LVP, and the buyer won't realize that the stucco job's terrible. Like you can't just get away with poor quality or poor design. Or even if it's poor design, it's what everyone else is doing.
Yeah, it has to be there has to be a differentiator, and also there's that online to offline component where you don't just make strategically invest in the property so that it stands out, because everybody knows that perceived value actually raises the value. When somebody perceives the value is high, then in their eyes and in the value of the property, everything increases. But also capturing those images and then having that online marketing tool to drive buyers into the space, so that when they see it online, they don't just come in the space, they're like, this doesn't look like the images, or vice versa. Because it's always like, you go on, when we were buying a house online, the pictures looked amazing. And then when you come into the space, you're like, this doesn't look anything like the pictures. It's terrible. But if they had just repainted, or, taken off all the curtains to bring in the light, or staged it with some minimal furniture just to provide that the ability to imagine yourself living in the space, maybe we would have purchased that property instead, So that makes a big difference.
So do you find that as like an element where developers or sellers that overlook maybe such a service, like I can watch a couple of YouTube videos and figure out from now about it. I know enough about interior design, like where you come in, you're like, hey, you got to take a more humble approach, and I promise you for the cost of me, I'm bringing 5 times the cost to you or something like that. Do you find that?
So for sure, I mean, especially a lot of contractors think they're designers. So, so I find, but like they are right in the sense that it has to make sense in terms of margin. The what's being invested in the space needs to yield a good return for them. So if the finishes, even if I come in under budget, which I try to do on any project that we're working on, and even if everything makes strategic sense, they still need to make sure that the numbers work out. So if the numbers work, then it doesn't make sense, for the design services and then doing the higher level of finishes. You can spend, you can make it look high end without costing high end, right? You can, through the coordination of materials and through the, selection of finishes, you can really elevate the space and make it look a lot more expensive than it really is. So we're looking into creating prepackaged design services for those type of projects or those properties that where the margins are really tight. So they just purchase these prepackaged design plans where they have all the finishes coordinated and selected already for them. It's a lower investment, and then it's, strategy on what to invest in the kitchen or color scheme or whatever it is, whatever those strategic aspects are that will, elevate the property value and get the home. Because the percentages, the statistic is like a home that stages sells like 90% faster. So it's a no-brainer in terms of closing faster. But for the more luxury home projects, that's when it really, really makes sense, because that's what they're looking for. They're looking for those finishes, that coordination of materials.
And I think it also adds the element of you got to put yourself in the buyer's shoes. So the developer, the contractor might say like, hey, this is I can see the kitchen table here. I can see the outdoor patio furniture here, and like it all works. But Suzanne probably, the buyer, you got to put yourself in the buyer's shoes, and it's so again, it's in the market of high supply, more sellers and buyers. What can I do to pat the buyer on the back? What can I do to help make my place more attractive in a feeding frenzy? So
for sure,
I think it only makes sense to put your place to invest into, hey, how can I optimize something through the buyer's eye? Because ultimately, it's the buyer that writes the paycheck.
Exactly. Even if it's just small tweaks, it really makes a huge difference. Like, for me, what's a like paint job or whatever, and it's like standard, somebody else, because of those small few tweaks, really makes a difference and makes or breaks the deal. So it's really important. And that really leans into like the overall team and who you have on your advisory of, whether it's a realtor or contractor or designer or somebody like yourself. You've built you've built multiple teams. What do you feel like is the biggest lesson that you've learned in terms of collaboration and just making deals happen?
You have to be able to understand that everyone's mind is wired just a little bit different. Everyone thinks just like a little bit different, and that's okay. That's the beauty of it. For instance, at the green energy company, I was able to work very closely with scientists and biologists and engineers and salespeople and legal, where I know that, not to over categorize, but engineers are very black and white on a lot of the time. X plus Y has to equal Z, and they'll drive down to that point. Biologists and scientists are very inquisitive in nature, so they'll go down rabbit holes, and they'll think and they'll think and then you got to kind of push more towards the do, if you will, and
Pull them
so
out.
a lot of times legal comes off as pessimist, but you got to make them into hey believe this, you know. So there's just it's about, again, long-term team building, long-term mindset. How can we win together? That's ultimately the goal at the end of the day. Hey, how can we win together? And optimizing team, making sure everyone feels like they have that pat on the back. A lot of the times, analysts, for example, they think that they do a lot of the work. They do most of the work, and people rarely give them the pat on the back, And there's a lot of ways just to make sure that everyone feels recognized, everyone feels heard, everyone feels like they have a voice at the table, And I think that's best. A lot of the times, you don't need 50 people at the table. You don't need 50 people at the table. You don't need 50 people on the team. You gotta be loyal to your team, and you can optimize processes a lot of the times with less people just there and staring, if you will. And so it's very mindset driven in my perspective.
Yeah, so we're being tasked with helping build out the design build firm here for an investor, and we're going to be bringing on all these different categories, like you mentioned, different people to run the entire firm. And I love that perspective that there are so many different types of characters, and you have to kind of be a psychologist. And I love that you kind of picked out the different characteristics. I mean, it's not across the board. There are outliers, but understanding people, understanding humans is being able to know what they need, and especially building them up. We all need to be uplifted and be seen for the work that we do, and that putting our heart and our souls into our day to day when we can be doing anything else. But we've chosen to be here and to show up.
Yeah, exactly. It's again, it's taking the step back, and just because you're tasked in the position of the golden gavel doesn't mean that the golden gavel's all just because of your hands. Like you gotta realize it was a whole team, and you're just you're the face of the team, but you gotta make sure the whole team feels teamed.
What?
I was gonna say, for lack of better words, the whole team has to feel teamed.
Exactly. I tell my kids all the time, I'm like, you win together and you lose together.
Yeah.
there's no two ways about it. If you would have, what's one question you wish I would have asked you, and how would you have answered?
I could go down the line of my opinions on fiat currency, my stances on Bitcoin or whatever you want, but this is a real estate focused podcast. So yeah. I would have loved you to ask me some questions about some books that we're reading. I love the thoughts and continual growth that you're able to get from a book mindset. I'm gonna throw the viewers into a few different avenues here. Love the guy, hate the guy, however you feel about the guy. He was probably pretty good at real estate. I'm reading Art of the Deal right now, and I can only read it through his voice right now. But there's definitely a lot of patting himself on the back. But anybody in real estate should just give it a read, and it makes you think about deal making. Makes you think about partnership.
Who was the book by?
Donald Trump, Art of the Deal.
Ah, okay.
Yeah, wow. So it makes you give from a mindset of deal making, of getting yourself within a deal. Gets the negotiation aspect also, but it just like a holistic avenue of what real estate entrepreneurship for itself means. It's really just putting a couple pieces to a pie. Couple other books that I like, I recommend it today, but The Five People You Meet in Heaven.
Interesting title.
So right here, The Five People You Meet in Heaven. I come from a little bit of like I like to put myself in a stoic sense, of reacting to life, controlling life, understanding that you can control the controllables. Five People You Meet in Heaven gives you a really good perspective on that unknown, where I started the conversation of the share laugh and the spread smile, and you have no idea what it can do to people. And this book puts from like a fictional sense, follows an old man that thought of nothing much of his life, but he met five people in heaven where it gave him a different perspective of, hey, why am I meeting you? Why am I meeting you? And it was like, this is how you impacted my life. This is how me doing this impacted you doing that. And it just really puts you in a great centered area. And then a couple other my favorite fictional ties. Again, this all helps from the entrepreneurial mindset perspective. One is The Alchemist by Paulo Coelho. I'm probably botching the last name. The Alchemist.
Okay.
And The Seeker of Nothing by Kabir Muhal. And
I like the book cover. That one's really pretty.
Yeah, this was a fable written by an Indian author, and trying to get myself back into it, but it followed just individual, owning your own life through a fictional tale, and I'll let the reader, I'll let the listener go into it, but I highly recommend it.
Growth and business minded. I love it. What are like three key takeaways for our listeners from our conversation today?
You never know the power of a smile and a laugh. You really never do.
I love that's your number one.
That's my number one. You just don't.
Yeah.
Relationships are such a long-term game. You have to be thinking from a long-term perspective, whether it be investors, putting the investor first and understanding that it takes one bad deal, it takes one bad relationship to ruin your name. And you got to be creative and you got to be agile. It's the Red Sea versus the Blue Sea, like you said. It's you got to get creative in today's market, especially with the amount of supply. So either you're gonna attack one end of it, or you're gonna focus your business and attack another end of it. Creative, where I'd done a LinkedIn post, but I talked about, hey, how can you get creative with your listing? Well, you're looking at it two ways here. Either is something memorable from the design perspective, so that your buyer's is probably already walked through 15 of the same white box. So how can I be memorable? Either maybe the buyer hates your memorability, maybe the buyer hates the design and they check you off the list, or they really remember your design and it's the first thing at the top of your mind because they already forgot what the 13th and the 14th white box they already walked in. They already forgot.
Yeah. That's a good one.
Or getting creative on the finance side, whether it be lease purchase options, whether it be just ways to get buyers interested from a creative finance perspective. I think both those are going to be increasing avenues, just to attract marketability.
Amazing. Matt, thank you so much for joining us today. I really enjoyed our conversation. Your insights on building relationships, navigating Florida's real estate market, and staying disciplined around operations and margins were incredibly insightful. For those listening who, if you want to connect with Matt or learn more about his projects, check the links in the show notes. And if you enjoy this episode, please subscribe, leave a review, and share it with a friend or a colleague who's passionate about scaling smart, resilient businesses. Until next time, this is Liat Siegel with Build Shefa. We're here to help you design for ROI and live with abundance. Take care.
Thank you.